talk on Tim and tell a story from nature, what I experienced in Denmark. In Denmark, my favorite flower is the dandelion. Dandelion is loved by kids. They grow dandelions, they make as illusions. It's very popular, they eat the rabbits. But as you grow older, something happens. And if you buy a house with a garden and you see the dandelion again, probably the love has turned to hate. The flower is the same, but you changed. Your own norms are replaced by society's norms. So now suddenly, your garden has to be as perfect as the neighbors. And you only need the flowers that you have decided on. But if you take this dandelion from the lawn, put it into your kitchen garden, treat it well, you will get access to all the virtues. It's good for nutrition, natural medicine, coffee, tea, wine, beer. And there's a smart farmer in Denmark who makes a living of growing that grass. Sniff that. So when we see a dandelion, what do we see? Do we see the weed? What do we see here? We only see the weed. In this way, if we try to take rid of it to get it outside, we could just as well see that as a bird and start harvesting all the virtues of this planet. We all dandelions somehow. We are blown away when we are ready to leave our homes. I have 3 kids. 2 of them, they will probably find welcoming ground where they land. But my youngest kid, he has autism. So it would be very hard to find welcoming ground when he land, because he doesn't really have friends. He's not on Facebook. You will never get through a job interview. The recruiter will expel him because you will not have the teamwork, the empathy that is required in all workplaces. And as a parent, I had to kind of go through some phases in life to say, it's got to be room in our society for all my kids, also for our youngest one. How can we make society see him as a bird instead of unwelcome tree? Well, this has put me on a journey. I came up with a challenge. Maybe it's not all our fellow citizens with autism that is the problem. Maybe it's our society that's getting too rigid into standards. So let's see if we can build a community that's more inclusive, that sees also people with autism and other disabilities as birds and human beings. This is what has brought me to the US. I relocated to the US from Denmark. I live in Delaware now. And really, what I intend to do is to try to make our societies look at people who are rural or who are objectors of humanity, is to potentially next best community, potentially next best friend. Because they, crucial ones, they are very often very clever. They want to contribute just as much as everyone else. I call it the dandelion philosophy. I've been practicing it for 10 years now. Specialist in residential, specialist in self environments where people with autism are welcome, where we can train them and bring them into the workspace in partnerships with the companies. We do that now in the US, and my goal is $100,000 within the next 10 years. If we can make the companies see the US together with us. So this is why I'm here in Utah. This is why I was at the conference yesterday to invite stakeholders of Utah to work with me to see how can we really change this population. There's almost 1.5% of all kids today are being diagnosed with autism. And there are many other disabilities. We can only make sustainable change if we can remind ourselves to see instead of every time we see an dandelion or some Christmas, we do not pay into standards. So I would like to invite all of you to be part of this journey. It's about to go global, from a grassroots perspective, and change the way we are together in our societies to the benefit of individuals, the families, but also for the corporate sector, that actually faces lack of talent. And a lot of talent you will find on beautiful flowers if you're going to see video.
Thank you. I would personally just like to thank Torkel for his efforts. It's a very personal thing for me. I too have a son who's autistic, and I think we really need to, as a country and as a community, come together to find ways to support these young men and women. So thank you. I'm really excited. And now, without further ado, we're going to have David come up and talk to us about all things Federal Reserve, interest rates, economics, and you've got a handout, I believe, that Linda passed out.
Thank you. I'm going to go down here so I can see my slides, and I can get to meet you as you can decide if you want to send me out. So I'm sitting back to these roads. Hi, it's nice to see you. Now, it's a the conference on yesterday, which dealt with economic disabilities, people with disabilities, jobs, was the usual meat and potatoes of an economist. And what we did yesterday is combine a global organization, the Global Independence Center, with the Columbus Community Center, which is a place dear to me and to my colleague Michael and others. Turn my volume on. That's right. I'll go into the microphone. Can you hear me?
Yeah, that's better.
5 years ago, 6 years ago, on a trip to Salt Lake City, I toured Columbus and saw a project that attempts to create dignity through work for people with cognitive disabilities in life. And the result of that, independent of my tour, which subsequently ended after helping them to fundraise, and me sending in contributions to them. One of my partners, our partner, Peter Gabriel, also came out on a trip around going there. We did not talk to each other. There was no collaboration. He toured it and again started to support the Columbus Community Center. Unfortunately, a little over 2 years ago, we lost Peter. And in the discussion of with his family on how to memorialize him, the original discussion took to going to some endowment for Georgetown University. And it was then revealed that Peter was a supporter of Columbus. So we collaborated, we created a scholarship fund, and there is now Peter DeGrowley Scholarship Fund. Columbus and Salt Lake City try and explain to 200 people in New York what they're doing in Salt Lake. Very hard to do. But when we bring them out here and to participate yesterday, and also to be able to do it with Torkel and our panels, for me. So secondly, thank you for inviting me, us, participation. Thank you, Rotary, for all the help we do. I have 15 or 20 minutes. I know how Rotary works. My family has a long history of Rotary in Jersey. So Rotary is a hard stop at 1:30. Speaker, be quick, get done, 2 questions, and everybody's got to get up. Sure. So we're going to adhere to the rules as best as we can. And that's why we only have 4 slides. First slide. Mike is going to help me with the slides so I can move around and point to them. The first slide. There we go. So what I want to do in 15 minutes is talk about the Federal Reserve. We had Janet Yellen testifying this morning, and she essentially reiterated the Federal Reserve policy. So we'll see if I can try to be clear with it and to articulate what it means for interest rates, finances, economics, investments, businesses, all the things that are of interest to many of us in this room. Now, Yellen is a new Fed chair, as you know, and she succeeds Ben Bernanke. And my favorite Federal Reserve chair, I like Janet Yellen, I've never said it about it, I'm the same as Bernanke, but I really like Alan Greenspan. And Greenspan developed, after 18 years at the Fed, an entire language. Remember, rationalism, exuberance, and conundrum. He had this marvelous language. It took us 18 years to figure out, or attempt to figure out, what the chairman of the Federal Reserve was trying to say in his last testimony before the United States Senate, before he retired as chairman of the Federal Reserve. He testified, presented this information, and when he was finished, one senator said, you know, Mr. Chairman, in all the years you've been in front of this committee, this is the first time I understood everything that you said. Greenspan looked up and smiled, and he said, Senator, if you understood everything that I said, I didn't speak clearly enough. So I'm going to try to speak clearly and do it in 15 minutes. This is a chart. Everybody has copies of the chart. And there goes the chart. Here it comes again. And what this is the balance sheet of the Federal Reserve. My laser pointer is a little bit heavy. This is the size of the balance sheet of the Federal Reserve, about $900 billion in assets, before Lehman Brothers and AIG and all of the stuff we went through 11 years ago. And this is the size of the balance sheet of the Federal Reserve right now. So we've gone from about 900 billion in size to it'll be 4.5 trillion. That's the first change. That's a policy of the last 5, 6, 7 years. Reduced the interest rate down to 0. Everybody worried about it. We're going to have a big inflation. Interest rates are going shooting up. The economy will go in a tank. Look at that. 7 years. Never happened. There are a lot of reasons why. So all the people who predicted the end of the world, they will eventually be right, but they were right. Now, what else did the Federal Reserve do? It did something else which I think is even more important. If you look at that chart, the bottom half of this is blue. Those are very short-term treasury bills. The green is in the middle, intermediate. And what the Federal Reserve did is not only did they quadruple the size, quintuple the size of the assets they hold, but they also converted the maturities from short term to intermediate term and long term. And in my opinion, as somebody who's in the investment advisory business, in the money management business, has to deal with financial markets every day, that is the most important part. If you print $1 trillion, and you go into the market and buy 90-day treasury, or you print $1 trillion, and you buy treasury bonds, now, if you look at the slide here, what we did is we just estimated how much maturity there was in the Federal Reserve's assets. And it used to average about 2 years. We use a calculation called duration. It's a technical calculation with a lot of math. Anybody want to stay for 3-4 hours? We'll be happy to get into it. Gotta watch economists with math and numbers. They're very dangerous. There's a reason. We go to school, and we study economics, we get into a graduate course, and the first thing they teach you quietly is to use point 2. the decimal place, because people think you're more accurate if you have a number that has a decimal. How big is the federal deficit? 496.3 billion. What's the 0.3? So you have to be very careful with the economists. You know, the economist goes to this grand canyon with light. They're standing there looking at this marvel of nature. She says, how old is this? He says, 10 million in 6 years. She says, what's the 6 years? He says, I was here at a conference 6 years ago. I asked the ranger how old it was. He said it was 10 million. All right, so, but this is a pretty good number here. So what do we have? We have roughly a 2-year maturity, and now we have a 6-year maturity. So we've taken the balance sheet of the Fed from 900 billion, that's a lot, averaging 2 years, and now we're 4.5 trillion, averaging 6 years. But what did the Fed do? It took it from you and me and everybody else. It bought it by printing money and putting it in the banking system. And the banking system now has a backup deposit with the Fed. Because people aren't borrowing from banks. They'd like you to do that. We should go borrow a few trillion and invest it in some businesses, but you're slow to do that. Next slide. Now the Fed says, well, we have a reason for doing this. We want to get the unemployment rate down. And in fact, the unemployment rate has been falling. You'll hear, you heard Janet Yellen say it today, and repeat it, and you're going to hear other Fed speakers do it. We had a Rocky Mountain Summit, Economic Summit, in Jackson Hole on Friday, and there were 3 Fed presidents there. They all did interviews and various things, and they all said the same thing. Part of our job is to get people back to work, create employment. Okay, how'd they do? Well, the first thing is the Fed doesn't have tools to really create jobs. You can lower interest rates, create a lot of liquidity, but it can't create jobs by itself. There are a whole lot of factors besides the Federal Reserve. And we can discuss those for 4 hours. So what happened? The unemployment rate did go down. That's this blue line here. That's the classic calculation of the unemployment. It's almost 6%. How did it go down? Because people dropped out of the labor force. They gave up. Some were disabled. There's a larger number on disability, and they're not in the labor force. If you're on full disability, you're not looking for work. If you're looking for work and you can't find it, you're unemployed. If you found it and it's part-time instead of full-time, you still have a job. So in this statistic, that's part of the decline. But something else happened. The labor participation rate, that's an economic structure, which says how big is the labor force, how big is the population, what proportion of the population is either working or looking for work, declined and has been declining for several years, a number of years, and it's back to where it was in the 1970s. Now, part of that is because of people on disability. Part of that is because of the changes in our structure, but another part of it, 15 million households is because we have a large cohort of chronic unemployment. We all know it. Everybody in this room can think of somebody who would like to have a job, full-time, and is either unable or has been disadvantaged or whatever the case may be, can't find it. That's some number of millions of people in the United States. So to see how big that gap is, because it's more than the fact that we're just getting older or demographics. What we did is we created this chart. I did, Bob Ruska did it. He's good at this. And he said, suppose we held the labor participation rate constant. what would the unemployment rate be if we were to calculate it with a constant participation rate? Now, that's not how we do it. This is a hypothetical. The red line is where the unemployment rate would be if the participation rate didn't change in the calculation. Because the participation rate is based on a survey. And if the survey calls your house and says, how many people are employed, how many are unemployed, how many are looking for work, how many aren't looking for work, and somebody says, I'm not looking for work, they don't ask why. They don't count that person in the labor. The unemployment rate, participation rate is constantly 11 in the United States. Today, would be 11 in Utah. But the 11 in the international number. That's a concern of the Federal Reserve and why they have kept and are keeping interest rates so low for so long. That's about to change. We're going to get to this slide. Something else is happening. At the same time, the Federal Reserve is now reducing, and by October will be at zero in the growth of its balance sheet. Will stop buying additional federal securities. Our government is issuing fewer. We had this thing called a deficit. We still have it. At its worst, it was $1.5 trillion a year in run rate. Now, politics have put a lid on spending. The political divide in Washington, the sequester, and the controversy in our national legislature, which we witness every single day, has collapsed or impaired or impeded spending. And it doesn't permit much in the way of additional taxes. So the deficit, because our economy is recovering, has been shrinking. And it's down to approximately the run rate of the deficit by the end of this summer will be close to $400 billion. That's still a lot. But it used to be $1,400 billion only a couple of years ago. If we stay on this track for 2 years, it's very possible the budget of the United States will be balanced. The budget of the United States may be balanced in just 2 more years. When we have a balanced budget because you collapse spending, what happens? Functions that take care of people with disabilities have a problem because governmental funds are part of their resources. The defense of the United States, the pilots who practice landing aircraft on aircraft carriers, they cut back and they have to learn to land from simulators. And they land less physical landings because they cost more. So the Defense Department has to be shrinking. There is a cost to a balanced budget and a shrinking budget. There's a benefit to those who obtain lower tax rates because taxes don't go up. And if the policy permits growth, eventually this turns to a positive. But do we have growth in the United States? Sure we do in Utah. But we don't in job creation in Jackson Hole. One of the reasons our job creation is lower. In Jackson Hole, we had a whole session on entrepreneurship. There are 5,000 publicly traded companies in the United States. A decade ago, there were 8,000. 37% of the business, economic, academic entrepreneurs in the room said, if I had to start a new business today, and it was a global business, I would start it outside of the United States. So there's a lot of change which will require policy change, and it's not likely we're going to get it for years, given the political impasse we have in our national government. Let's get back to the Federal Reserve. You're the Federal Reserve. You lower the interest rates to fight a crisis, you take it down to near zero, you stay there and stay there and stay there. People don't believe you. You say, yeah, we're going to do this. Oh, yes, we will. And you won't have any inflation. Oh, yes, you will. Well, we didn't have it. Now we're in recovery. What's the Fed got to do? Well, it has the benefit of a shrinking deficit. So it can take its policy down to move on. On the other hand, at some point, the Federal Reserve now has to unwind this. They have to take the interest rate away from zero and raise it to something else. They have to do it without slowing the economic recovery, which is still somewhat fragile. Better than it used to be a year, 2 or 3 ago, but the footing is mixed. And they want to do it without creating the inflation that everybody's been worried about for the last 7 or 8 years. That's what's in front of us as business people, investors, speculators, retired folks, borrowers, savers. Now here comes the forecast. Every forecast has a guarantee. Every forecast has a guarantee. You are kind enough, Stephanie, and the Rotary Club, an organization dear to my heart, and many of my family who didn't have to travel all the time were members. And if I weren't on airplanes, I could find a way so I could do the makeups. Problem is, I can't do the makeups because I'm someplace else and I can't find them. I would be there's a lot of Kotok scholars who wrote the history of farming in New Jersey. So here's the guarantee. You invite me kindly to this Salute gathering. I bring you a forecast which I did and am about to complete. You hold on to it. You invite me back. Bring back the forecast. I guarantee you, I will give you a new one. Here's today's forecast. The federal deficit shrinks towards a balanced budget over the next 2 years or 3 years. There is a political impasse in Washington, and that isn't going to change. It makes no difference if the Republicans get a majority in the U.S. Senate or pick up a couple seats in the Senate or don't pick up any seats in the Senate. The House of Representatives is absolutely and firmly a Republican majority, and its policy when it comes to suppression of taxation and budget restraint is in place. The Ryan-Murray compromise on the budget for the next 2 years is in the concrete, and it isn't going to move. So that line is going to go up. That will enable the Federal Reserve to taper, as they said they would. By the end of this year, the Fed's balance sheet will stop growing. They will then roll the maturities of that long-term maturity package for a while. How long is a while? More than a month or two? Maybe a year or two? Maybe 6 months? We don't know. They don't know. So they'll talk about things like forward guidance. That's another word Greenspan could have made that up. But they don't know. The economy continues on a growth track. We are 6 months in a row of over 200,000 new non-farm jobs in the United States. That's good. It's much better than it's only 100. And it's even better than 0 or negative. So it's improving. Is it as robust as we would like? No. Will it become so? Maybe. But the trend is positive. Inflation. Somewhere around 1, 1.5, depending on how you measure it now. The risk. Shock in the energy sector. We have had a long period of sustained oil prices above $100. History's not kind when we have that. There is a transmission mechanism for the very pervasive price of something called gasoline and oil, and petroleum, and energy. The good thing for the United States is that we are determined that we have an abundance of it. And so we haven't had the upward pressure of that price relative to the rest of the world. Will we get it? That remains to be seen. So the risk of inflation gradually rising, the recovery in the economy gradually improving. Because of that, labor cost pressure is suppressed, and because of that, economic profits are very high. How much longer do we have this? And will we have a benign, gradual movement to some stable normal? No one knows. Our view in our firm is that it is now time, after 4, 5, or 6 years of a very benign economic arena for investors, but a very difficult one for those who experienced adversity from economic pain. It is now time for a shift. We would hope that the shift will be gradual. But I will tell you, in the circles that we see all over the world, and I suspect in Salt Lake City, hope is not an investment strategy. And therefore, gradations of additional safety and protective measures in portfolios are probably wise to rigorously. So that's the forecast. Gradual, gradual, gradual. A little more inflation coming. Gradually rising interest rates coming. Continuing, gradually increasing economic activity in the U.S. It benefits us. As Janet Yellen said today, uncertainty is very high. She's absolutely right. It's always could change tomorrow. Thank you very much.
We have time for a couple of questions. So,
Yes, ma'am.
How do you see the topic of
How do I see the topic of income inequality playing into this? That's the famous new book by Peggy, and I read it. He did very, very thoughtful research. Peggy's book really is not about income inequality, it's about wealth inequality. He writes in French. The English version is a translation. I have not read the French version. It's on my list of things to do. Yesterday was Bastille Day. Enfant de la patrie, le jour de gloire est arrivé. And today we sang the Star Spangled Banner here. And we have a common theme. Both countries originated in a revolution to obtain freedom. That one went in a direction today in terms of budget where 60% of the population works for the government. We haven't reached that yet. Income inequality in the United States, not wealth inequality as in Thomas Piketty's book, is wider. The wealthy, the rich, the affluent are getting larger accumulations. I'm one of them. The poor, that segment is growing. The middle is eroding in both directions. Now, we're in a place where charity, philanthropy, concern of humanity is part of a culture. I do that. I tithe and give. I'm happy to support Columbus and probably 100 charities. I'm able to do it. But there's only so much of a gap that philanthropy can fill. And the fear is the numbers in the income inequality spectrum are widening faster than the gap of people of goodwill in the field. That is a danger to a society and a structure. So your question is profound, and it's a profound question for the United States. And we will see the results over the next 10 or 30 years, over 10 years, to see what we do. Question.
Do you see any chance that BCA would change that 9-hour week rule?
Is there any chance of 29-hour week? Well, now there's a big controversy about the 29-hour, 30-hour week. That's why some argue the entire part-time employment thing is due to Obamacare. That's too extreme. Some of it is. So 29-hour has become a magic number here, just like 35 has become a trend. Is it likely to change in the next 3 years? No. I don't see any change that is structural and policy obtainable out of this political impasse. The thing that is so hard for us to accept is the fact that we know we need to make changes. We don't see common ground reached, and we don't see a path to get to it. And so sometimes I say, I wish we could vote them all out, Democrats, Republicans, all of them. We are a structural impediment in our political system, and it won't resolve. It doesn't work. That's my humble opinion. One more, last question?
Last question.
Last question. Yes, sir.
With technology coming into play in all of the employment numbers, what do you foresee as to what our unemployment rate might be, because technology is supplementing a lot of the physical labor characteristics that were.
Question is technology and its substitutes, and what does that do for employment? For those who are technologically capable, it's a marvelous opportunity. Here we have a discussion yesterday on how folks who are autistic have skills which are dynamic and profoundly able to alter the productivity with the use of technology. Because they can compute faster than their counterparts or family members who don't have the skill. Yesterday in detail, we heard your story and many others like it. So there is an opportunistic approach when it comes to the use of technology. It's remarkable. We had a presentation in which someone said, when we started communicating between the East Coast and the West Coast, we put mail on a boat, took it to the Panama Canal, hauled it across the narrow part of the two continents, put it on a bed, mules took it across, and then we took it to San Francisco. Now that wasn't so long ago. Okay. Then we discovered something called the Pony Express. Wells Fargo still uses the symbol. And then somebody created the telegraph. Think about it. In the last 2 hours, there has been 100 million Google searches in the last 2 hours. My source is Al Varian, the chief economist of Google. Think about where technology can lead us. It's remarkable. What does it do for someone who is 55 or 50 in a household, unemployed, has been chronically unemployed, and doesn't have those skills, and there is no training system in place for that person to obtain it? So, yes, 20 years, we'll evolve through this. Right now, 20 million households who are in that cohort in the United States. That is the real reason behind the income inequality that you mentioned. I'm out of time. It's a hard stop at 1:30. I want to go deeper.
Thank you very much. That was fascinating.